Hey guys, welcome back. So I've made some videos on this channel about crypto and taxation. However, if I'm completely honest, it's not my area of expertise. I can talk about investing all day long. Taxation though, I can't really speak on from any point of experience or authority. So for the last maybe 3 to 4 months, certainly through the back end of last year, I've been searching for someone who can come onto the channel and actually speak from experience, knowledge, and authority. This is the video to do that. The guest on this video is essentially an accountant. He's a partner in an international accountancy firm based here in the UK, and we are going to be talking about some very important stuff. So whilst this video is long form, please pay attention. We are talking about some really important stuff, particularly if you're minting NFTs, you're staking, you're receiving airdrops. We're going to get into all of the nooks and crannies when it comes to taxation. Again, it is long form. Please take your time, grab yourself a cup of tea and enjoy. And I have the huge honor of introducing Chris Etherington, who is from a company here in the UK called RSM. They're one of the biggest accountancy firms in the country. And he is an expert. He's a qualified accountant. I'm going to let him introduce himself. But if you are in the crypto space right now, you're investing, you're trading, you're staking, and you're trying to make sense of what's going on with HMRC and tax and what you should be doing, then this episode really is for you. I'll be using this as an audio podcast as well for YouTube. So if you are listening to this and you also want to watch this interview as well, then by all means, head over to the YouTube channel and you can watch it as well. But without further ado, I want to welcome Chris. Happy New Year, mate. And thank you for coming on the first day of the new year. Not a problem at all. So just give a brief intro to you and what you essentially do, because I think this is really important. There are a lot of videos and a lot of content out there at the moment on this topic of crypto and taxes, not necessarily from professionals. You are a professional, you work in the tax arena. So I think just for the benefit of the listeners, just give an introduction to who you are, what you do, and how you got into this topic of tax and crypto specifically.
Yep. So, as you said, my name's Chris Etherington. I'm a partner at an accountancy firm called RSM in the UK. We're a worldwide network with over 120 accountancy practices all over the world, different countries and so on. And I specialise in what we call private client tax, which in plain English means I basically advise individuals on their personal tax affairs. Primarily, that is business owners, entrepreneurs, people like that. It's anyone whose affairs are a little bit more complex, to be honest with you. And over the last few years, there's been a lot more inquiries coming my way in relation to cryptocurrency. So that's really how I started getting into the space. Often it's people in the tech space, early adopters, software developers, and people like that, software engineers, and they've been investing into crypto, getting involved in all sorts of different wild and wacky coins and so on. And the challenge for them is, well, how do I report this stuff? So on the very basic side of stuff of what we do, it's reporting to HMRC. So it's not necessarily the most sexy work, but it's tax returns. It's making sure that you're reporting the right amount at the right time. And the other part is, okay, well, what about the forward-thinking side of things? How do I best structure my affairs? How do I plan for the future? How do I know, if I'm going to go into something, how can I prepare in advance as to what the tax implications will be for that business, for the crypto venture that you're going into? And it's that, as well as the reactive piece, which is like the looking backwards. That's your HMRC reporting side. It's the looking forwards part. And we act for thousands of individual clients across the UK. I've got a large team. I'm based in Leeds in Yorkshire. And because I'm quite interested in the tech space more generally, it's piqued my interest. And over the last couple of years, I've been getting involved in cryptocurrency more and more. I've invested myself. I think if you're going to be advising people, you need to get your hands dirty. Actually, I can't say that I'm going to be sitting on the beach anytime soon with my crypto winnings, but it's interesting, and it's for a lot of people, I think, that are getting into it, they probably start getting into it maybe as a bit of a hobby, and just attracted potentially by the huge returns that are publicized in the press and so on, or you just go on coin market cap and you see some of the crazy returns, and that, there's that fear
Yeah.
of missing out. Now, that's not why I got into it. It really is just because clients have been coming to me, but it's that part of it has got me into, how do I get invested myself? What's the best way of advising my clients in terms of structuring their affairs? Unless you're actually doing it yourself, I don't think that you can truly give the full picture of what are the tax implications, because there's a lot of the advice here, and we'll get into it over the course of this conversation, I'm sure. The advice and the guidance that we've got is quite high level, and what we've got to do is try and interpret that, apply it to apply legislation, case law, which does effectively exist for stocks and shares, doesn't exist for cryptocurrency, and we're trying to apply it to all these new innovative ways that cryptocurrency is being used and the blockchain more widely.
Mhm. You mentioned some really important points there. It's obviously doing the reactive bit in terms of paying the tax on what you've already done, but you mentioned
Mm-hmm.
forward thinking and forward planning your taxes. And I think obviously you're in the industry, and that's something that you will obviously be having conversations with your clients about. When I was in, advising as a financial advisor, would always forward plan. I think for most people who have stumbled into crypto, that forward thinking piece isn't necessarily there. And it's interesting you talk about how innovative crypto and the blockchain is, and case law, because in the stocks and shares arena, you can forward plan all of your investments around the tax angle of it, around whether you're going to use your ISAs or whether you're going to use VCTs or EISs. You can do all of that in that forward thinking plan. At the moment, there doesn't seem to be a lot that you can do. I don't know when it will be interesting to hear your views on this in the crypto space around forward planning. So, what do you mean exactly by that when you say forward planning on the
Yeah,
crypto side?
so I think you're exactly right. From a normal financial investment perspective, there's all sorts of different ways that the government provides you with tax relief. So it's basic financial planning. Some people,
Mm-hmm.
it's not tax avoidance. It's just structuring your affairs in the appropriate way. And we've got things like, on the basic side, junior ISAs, ISA accounts. As you go into the more exotic end of the spectrum, you've got things like EIS and CDIS and VCTs, and
Mm-hmm.
these are all there to try and incentivize entrepreneurial behavior. Yeah, so like EIS is it's a tax relief that is provided to startups and scale ups so that they can raise funding in a tax efficient way. And because it has risk and significant risk, and for a number of, think how many startups fail each year, the government needs to incentivize people in order to get them to invest in the market. Similarly, we've got inheritance tax relief if you invest
Mm-hmm.
into the AIM market, which is the market which is slightly below things like the FTSE.
Mm-hmm.
There's more risk in those companies, and therefore, if you put your money in there, you get things like business property relief, which is a full exemption from inheritance tax. We have nothing for
Mm-hmm.
cryptocurrency yet. Now, we don't
Yeah.
even have legislation, for all of this stuff. With for normal stock shares, traditional financial instruments, whole raft of case law, whole raft of legislation and rules that is set in stone that allows you to have certainty as to what the tax treatment will be. What we have for cryptocurrency is guidance. Yeah, it's simple as that. We just have
Yeah.
what HMRC have provided to us over the last couple of years. Last published guidance was about 2019. We are due, as I understand it, to be getting new guidance in the coming months. But it's not strictly legislation. It's not something that you're basically having to put your best foot forward and interpret those rules as best you can. Now, in terms of what you can do to try and best manage your plans going forward, from a tax perspective, I get a lot of inquiries from people who are particularly looking at their cryptocurrency activities in a more business and more professional way. They're starting to think, actually, I can make more money doing this than my day job. And if I look into this,
Mm-hmm.
and I can, maybe start looking into DeFi, and going into some of this stuff, and maybe actually spending a lot more of my time specifically looking at trading. Now, but those are business type activities, and it's the same for any sort of individual that is going into a trade. You should be thinking about how best you structure that stuff. So if I'm an individual and I'm going into the NFT space, for example, I'm starting to mint things and I'm making a return from selling them. Well, should I be doing that individually? Should I be doing it in a corporate vehicle? Should I be doing it in partnership with other people? These are all very basic business structuring issues that apply to cryptocurrency as much as they apply to any other business. And those are the sort of things that I'm getting involved with a lot at the moment in terms of how best to structure. The other area that I get inquiries from, and it's perhaps the more extreme end of the spectrum, we don't see this so much with a traditional business, is people looking to move overseas. And it's perhaps because of the demographic and the age of the people that are getting involved in the space. If it, for me, example, married, wife, kids, house, all of that stuff, much harder for me to uproot and shift myself over to a more tax-friendly jurisdiction from a cryptocurrency perspective. If I'm in my 20s and I'm doing this and I'm starting to think, well, or even my 30s, if I haven't laid down those roots at that point, I'm more flexible. I can potentially move somewhere where actually I can, start this business anywhere in the world. You don't need to be sat in the UK. Obviously, your family are here, and then so some people are looking at, okay, well, is moving overseas, is residency something that I should be looking at? Should I be trying to change my residency from a tax perspective? And there are surprising locations that you could potentially move to. So, for example, Germany is one of the most tax-friendly locations for cryptocurrency. It's not like with what you might read in the press is, right, you've got to go, basically go live on a rock somewhere in the middle of the Indian Ocean. There are places where civilization exists. Not trying to be too disparaging to those two jurisdictions, but usually there is a personal cost to pay if you want to benefit, if you like, from a tax residency play in terms of moving yourself outside of the UK tax net. Ideally, where we'll hopefully get to, and this will probably come, it's obviously a benefit that cryptocurrency isn't regulated. It's one of the attractions for many people. But to some extent, the more it becomes regulated, the more that the volatility comes out of the market, the more likelihood there will be that we will have legislation, that we will have these incentives, that it will become a more legitimate way for businesses to raise funds, an easier way for businesses to raise funds. It becomes a bit more boring ultimately, and that in turn will, I think, start to, the government will start to think, well, actually, this is activity that we should start to incentivize as well. At the moment, it's seen too much like gambling. It's not even seen as a form of money or currency.
That's very, very true. Yeah, it's interesting you mentioned the whole demographics moving away, because I've literally just got back from Dubai. So obviously one of my personal goals for myself and my partner is we want to move out to Dubai and live out there for a period of time. And we've been going there this is the 7th or 8th year that we've been going there. So this year we thought, okay, so if we're going to talk seriously about moving to Dubai, let's have a look at, if we were to buy a property, what could we expect on the property market? What are they building? What do you get for your money? So on and so forth. So we went looking at some developments. And these things that they're building out there are beautiful developments. Just private beaches, lakes and creeks and whole-scale communities. Beautiful. And the guy who was taking us around was like, if you've got Bitcoin, you can pay us in Bitcoin. And for me, I was like, okay, tax questions immediately. How do you do this? All this kind of stuff. I haven't got that level of Bitcoin anyway. But it was very, very interesting to see that. And I think when I say that, I remember I've had a number of emails over the New Year's, and exactly what you're saying right there. I've got a guy who's in his 20s. He's been trading. He's like, I'm thinking of actually moving. And one of the reasons why Dubai is so attractive is because it's zero income tax. And so for many people, like you're saying, who haven't got roots, who are looking at this as a viable thing, and I guess, I don't know whether it's perception, and maybe this is a question for you actually, just thinking of this. You've got the option of doing it as a business, doing it as an individual, and I guess there will be benefits to building things in a business. But if you've got the opportunity to go to somewhere like Dubai, for example, set up a business, get residency included when you do that, zero income tax, are we missing a trick a little bit with the fact that the tax regime, and we'll get into the background around this in a moment, is so convoluted and we've only got guidance right now? Because for anyone who has a little bit of a clear idea of what they want to do, moving is a pretty good option, particularly in the fact that, places like Dubai, you get better lifestyle, that kind of stuff. I mean, do you think we're missing a trick with the fact that we're behind on where we should be with the clarity that is required for these kind of
I
access
think
now?
we are behind. We're behind countries which are more agile, and ultimately we've got a very complex tax system. We've got a very complex financial system. Moving us something like what we have in the UK to fit something that is so fast paced as the cryptocurrency world, we're an oil tanker by comparison. It's really difficult to do at pace. We're doing pretty well compared to some of our large country competitors, if you like. The fact that we have guidance is better than some people were doing. So
Yeah.
it's not all doom and gloom. And there are more things to consider if you are seriously thinking about moving overseas. My starting point is always, what can we do in the UK? I don't think it is sensible tax planning to first port of call to explore. Right, let's sell up, move overseas somewhere.
Jurisdiction. Yeah,
it often doesn't work. Because you've got this. You've just been to Dubai. You got you probably the sort of the post holiday blues slightly. Come back to the cold UK. It was amazing over there. Everybody fantasizes, don't they? They're on holiday. You can't help but explore what the property prices look like out in the place that you're staying at, because you think, well, I could live like this. Yeah, it'd be amazing. But the reality sometimes, I mean, yes, Dubai might be great now, but what about when it's it's 40 degrees outside but feels like 60, and you've got 6 months of air conditioning indoors?
That's very, very true.
It's the personal part.
Yeah.
So you can't divorce the tax implications. It's a cliche to say, you shouldn't let the tax tail wag the dog. And the point around that is that tax is important, but it shouldn't dictate everything that you do in your life. And so a lot of people are attracted by tax rates overseas, and they go, yeah, that sounds amazing. What you've got to do is actually, can you manage your life in that way? Yeah, is it actually going to be a way that you can lead your life with your family? What does that look like on a long-term basis? Because if you are to try and do this for tax reasons, effectively, you're going to have to stay outside the UK for at least 5 years. Not that doesn't mean you can't spend any days in the UK, but you've got to break your UK residency for 5 years. And that means for a lot of people, it's not a hard and fast rule. You could do a whole podcast just on the rules about residency rules, to be honest, how many days you can spend and so on. I won't go into the detail, but generally speaking, a lot of people, if they've got a property here and they spend a reasonable amount of time here, you're probably going to be allowed to spend 90 days a year. And that's tested at when you're in the UK at midnight generally. So 3 months or so. Yeah, that's quite a big shift to go from, right, and what happens if family stuff and you need to be here? You don't want to be restricted by tax simply because I've made some large gains on Bitcoin or whatever. So yes, it's an option, and I do have clients that are exploring it, and they're almost a bit nomadic in their lifestyle anyway. That's where it really works. Where actually they're quite happy traveling, and they're quite happy splitting their time between different countries. If you are prepared to just go to one location like a Dubai, that's absolutely fine. You can get a bit, you can find jurisdictions in the world that will work for you. Portugal's quite good. Germany's quite good. Like I said, it doesn't need to be UAE's good, but then you've got other, like the more agile countries, like going back to your point around, are we missing a trick? Well, you look at places like Gibraltar and Malta. They are very agile, as they were with sort of the gambling space as well. They put legislation in place, they put regulation in place. People can go there and they understand what the law is, and they can set up businesses there and have a bit of certainty about what the tax treatment's going to be. That is what's attracting people. And I think if you're doing this on a more professional basis, that part, the part that actually I can go somewhere, I can go overseas, and maybe I can set up an entity in a country which is actually ahead of the game in terms of crypto legislation and regulation. You've got to cut the government a bit of slack as well. I mean, we've just come out, we're still in the midst of slightly a global crisis, haven't we? And there are things that I'm sure the Chancellor would be wanting to do in this space, and probably a bit more proactively, putting steps in place to make this it will take advantage of the opportunity, if you like, from a blockchain perspective, from a cryptocurrency perspective. But he's had his hands tied, hasn't he? He's been had to be talking about what I do on a daily basis, the end of the reactive part in terms of reporting. He's just had to react to news as it's been coming through. So, he's been in the job nearly 2 years or so, and he's had no opportunity really to actually do anything proactive. And my understanding is that the Treasury and government aren't anti-crypto at all. Yeah, it's not necessarily true of the FCA and so on. We hear some very negative messages about it, but there is a big opportunity for the economy, and I'm sure in due time that once we've got the headspace to be able to do it, the government will be moving. But it's challenging to move at pace.
Yeah, I mean, I follow a lot of the developments around crypto, and I know that the US they are trying to understand crypto from a regulation point of view right now. And I guess I would really love to know from your experience working in the tax space as an accountant. Can you give us a brief background of HMRC's stance on
Mm-hmm.
crypto assets and how they're viewing it at this point in time, and why it's becoming such a big point of interest for HMRC at this point in time? Because I think a lot of people remember companies like Coinbase now. If you have, I think it's an account balance of
Correct. Yeah.
£5,000 or so, Coinbase has to report that to HMRC. Maybe many people feel as though they can get away with not paying
Mm-hmm.
the tax. I'm like, well, no, because if Coinbase have to report that you've got an account with over £5,000 in it, well, guess what?
Yeah.
HMRC knows. But what's the background and why is it such a point of interest
I
now?
mean, it's simple, really, in the sense that HMRC are interested if they can raise additional revenues for the exchequer. If you look at beginning of the pandemic, the amount of gains that have been just in Bitcoin and some of the altcoins and so on, huge amount of gains that people have generated in that period. There's tax to pay, so HMRC want their slice of the cake. And before that, we've had significant peaks, sort of 2017, 18 time, and since then it was a big drop off, and then it's come back to the fore, and we're going to see not just HMRC but government bodies across the world trying to get information out of the exchanges in particular to find out who's made these gains. You look at what's happened in the US. They've got this new infrastructure bill that's been going through. They were predicting they're going to get something like $28 billion in terms of extra revenue just from cryptocurrency and from the information that they'll be able to get from taxpayers. I don't quite know how they reach that figure, because part of the problem is the government bodies have power to get this information from the exchanges, but at the moment it's a little bit of a one-way street in the sense that they can request that information. So what, like you were describing with Coinbase, write to the exchanges like Coinbase, like eToro, some of the larger ones, and say, look, who's been making these gains? Can you provide us with the information? You may struggle to believe it, but HMRC are really good on technology, so they've invested into data analytics software, and a lot of that automatically throws up inquiries into people's positions and their affairs and so on. So they're getting information.
Some people may say that that's a scary Big Brother tactic, but I do believe that, because I have a friend who works for a company that does a lot of work for HMRC, and he says some of the tech that they have is actually quite scary. You wouldn't expect that HMRC is able to do this stuff, but now they can if they want.
They keep it like hidden under a bushel slightly, because I don't think they want everybody to know the full intricacies about how it works. But it's award-winning software. They invested in it years ago, and it's probably, I think the stats are, it's raised at least $5 billion extra tax revenues in the last five years or so. And that's from taking all the data, broadly putting it into a supercomputer piece of software, and it throws up the opportunities for inspectors to open inquiries into people's affairs. So we are at the tip of the iceberg, if you like. I think only recently, in the last few days, there's been sort of the Indian tax authorities have been looking at the exchanges, some of the smaller exchanges, and they've generated, I think it was $6 million or something around those levels from in the last couple of days. And you think, well, what is the size of the prize for HMRC here? Like you say, the system we've got at the moment, complicated, really difficult for a layman to get their head around and to necessarily report what they need to report or calculate even without the assistance of a professional or software to help them get to those figures, there's inevitably going to be mistakes made. And the risk people run by sticking their heads in the sand is that at some point, HMRC will get this information either by requesting it, or as seems to be happening in the US, the IRS are just getting powers where everybody has to report it. The exchanges, if you're involved in crypto, it's really broad, and you are going to have to provide data to the IRS. HMRC would love that, and if they could get that information, and internationally, countries and government bodies are sharing this information with each other, so there's almost no hiding place now. It's not just a case of I can have it an offshore, an account and with an exchange based in Hong Kong or something. No, they can get the information still. So at some point, that data will become available, and if you have deliberately not disclosed something, and you know that you had something you should have been disclosing it, then HMRC can go back quite a long way, almost as much as 20 years,
So I do have a question on this, because this is something that I've noticed in my comment section on all of the videos that I have made around crypto. It's like, oh, well, how will they know? If I've made gains like 3-4 years ago and they find out 10 years later, they're not really going to bother with me. And I don't know. I know that in the States, the IRS has way more power. So they can go into your bank account, it has been recorded, and take money. HMRC, I don't think, do that here in this country. But for those people who are listening thinking, well, they're never going to find out, what kind of things have you noticed HMRC do when they have identified, well, actually, hang on a second, you had this that you didn't declare, and you should have paid tax on it? What kind of things are they able to do? What kind of things have you noticed that HMRC have done?
It's probably less so in the crypto space at the moment, because I think we're still at the early stages with all of this. They have been sending what are known as nudge letters. So those are a friendly request for you to provide information to HMRC, if HMRC can be friendly, if you like. It's the precursor to an inquiry, ultimately. They know that there's probably something going on here, and they've got some data, and they think, well, actually, should you have been paying more tax than you have been declaring? And you've got an opportunity to try and get your affairs in order, and they will perhaps look at you more favorably in terms of any interest or penalties that might be due. But we do see this more frequently with other areas. So in recent years, there's been a drive from HMRC to look at people's offshore affairs, in a similar way. They're worried that, like cryptocurrency, they haven't got a full picture of what everybody's offshore affairs look like. Do you have offshore income? Do you have offshore gains? Are there things that you should have been declaring? All the stuff that we see in Panama Papers and things. They think, that's maybe at the extreme end of some of that stuff. But that simply, you could be somebody who's got property overseas, and you were paying tax in Spain, say, if you had a property there and renting it out, and you didn't realize that you had to pay tax over here, and actually you had a liability to HMRC, well, you may need to report that. And there was a bit of a moratorium for people to declare that a few years back. But now HMRC are getting all this data, and they are opening what are known as discoveries assessments. So ordinarily, not to go into too much of detail, you submit your tax return, you've got a 12-month period, HMRC can open an inquiry into it in that 12 months. After that, they've got extra powers called discovery powers. And those can be tipped from usually 4, 6, or 20 years, depending on the sort of activity. Wow. So if you've just made an error and mistake, it can be 6 years, say. If you haven't taken reasonable care. If you've deliberately not disclosed something, it'd be 20. Now, most people fall in that sort of 4 to 6 year period. Like I've tried, often they've taken advice, or they've simply missed something off their return, an error, that sort of thing. But with these offshore things, what they did was extend the periods and said, right, no, actually, we can look into it for a much longer period. So that the point is that you can be looking over your shoulder for a long time, and all HMRC will be, if they've got the data and it is a significant flag per their automated systems, ultimately, that raise it to an inspector, well, they can look back. I'm working with a client at the moment where HMRC, they did something 6 years ago, they thought they did it right, it was a mistake, but HMRC have at the 6-year point, if you like, right, said, yeah, knocking on the door, we think you've made a mistake here, and we would like you to deal with this. So that is something that I think a lot of my clients, when they're coming to me, they are particularly worried about, is that if they've had a life-changing amount paid to them via their crypto gains and so on, and they want to put it into, say, a property, we want to put it in bricks and mortar, something that isn't liquid, then how do they make sure that they are reporting that correctly to HMRC and that they
Yeah.
can sleep soundly at night?
Because in those situations, you definitely don't, and especially if you're, we've heard stories about Doge
Mm-hmm.
millionaires and people who have made that kind of life changing money. The last thing you want is to be looking over your shoulder for the next 20 years. That, hang on a second, there might be a tax that
Mm-hmm.
I've not paid. I mean, that is you, and plus the penalties they can leverage as well. I can imagine will be quite hefty for those kind of things if they feel that you have done something wrong. So within crypto assets, so we know that things like income tax, capital gains, those are probably the
Yeah.
common ones that people know of. But what taxes are actually due specifically on the crypto assets as they stand today in your
So the
field?
vast majority of people will be subject to capital gains tax, which is the tax that you pay when you buy and sell things, ultimately. And it's very similar rules in terms of the capital gains tax regime as it is for stocks and shares. So for anybody that doesn't hold their shares in the LISA and does pay tax, then it's those rules that will apply. And how HMRC interpret it, very simply, is that if you bought something for X price and sold it for Y, the difference between them is your chargeable gain. And that can be subject to tax at 20%. It can be 10% if you're a basic rate taxpayer and you don't have much other income. But if you had an income and you were a higher rate taxpayer, then it's definitely going to be 20. Now, every person gets what's known as an annual exemption from capital gains tax. And that's at the moment £12,300. So you can make gains up to that amount each year, and there wouldn't be any capital gains tax to worry about. So if we're looking at the vast majority of people, they may not have a liability to worry about, and they may not even need to declare anything to HMRC. What you want to do is make sure you can defend that position, and keep records and be able to justify that. And if any HMRC did ever come, then you can say, look, no, my gains were well below, and I didn't need to worry about submitting a tax return. What tends to happen, I think, and this is it's a certain demographic of going back to the demographics of who's investing in this. If you are, say, in your 30s, 40s, and you're doing a tax return anyway, let's say you started getting investment income from different sources, a rental property, for example, you can quite easily still need to declare all your crypto gains to HMRC, even if you don't have a liability. And that's where the admin side can become quite complicated. Now, the rules, how they work for that are that because you've got this 12,300 allowance each year, they say you can make disposals of any asset as long as it's lower than 4 times that annual exemption. So just over 49 grand broadly. If I've got £1,000 in crypto and I make 50 odd transactions in a year, well, I've been buying and selling, and I've got 50 grand's worth of proceeds during that year because of the 50 transactions. And therefore, I need to disclose all of that on a tax return to HMRC. Administrative nightmare doing all of this, by the way.
Yeah, and this is an interesting point because I've had people say to me, and I've seen this in the comment section as well. I think if you're simply buying crypto and you're holding it, that's one thing. But I know people who have done a shared load of transactions by trading, and they're completely in the dark as to, do I need to report it? How does it actually work in terms of, well, I would have made a loss on some of them, I would have made a gain on some of the transactions. But when you're trading, there needs to be much, much more attention paid to the tax side to it because you are trading and those transactions rack up over time.
Yeah. And I guess the question there is, there's trading for crypto purposes. A lot of people refer to themselves as a crypto trader. It's different for tax purposes. So if I was doing this in relation to stocks and shares, if I was day trading and buying and selling things on a reasonably regular basis, would I be treated as having a trade for income tax purposes? Probably not, is the straightforward answer. It's quite complicated, this, to be honest with you, and this is where a few people could get tripped up. I think HMRC's starting point is likely to be still that most people are subject to capital gains tax, even if they're frequently trading, because this is the nature of crypto, ultimately. I mean, a lot of people could be doing hundreds, thousands of trades a year. There are obviously hodlers and people who hang on to their investment and so on, but there's a lot of people who come in and out of a market because it's so volatile, and you might have even automated bots that help you do that, and I think where you've got to look at this slightly differently to other asset classes and other activities that people do. Yeah, so what we're doing is we're looking at the legislation and we're looking at case law as to try and determine whether you're trading for income tax purposes or not. And there's something called the badges of trade, which you have to look at. And these are sort of like set out in case law as to these are sort of activities that we'd expect somebody to be demonstrating if they were undertaking a trade. And then we've got to apply that to cryptocurrency. So it would be things like, okay, well, what sort of experience have you got? Yeah, are you a professional cryptocurrency trader? Have you worked at exchanges and stuff like that? How have you funded this originally? Is it from your own money? Have you taken money from somebody else? Do you have a business plan? Is there like a proper plan in place, a strategy to make profits? Is it automated? How much time do you spend on it? All of these factors and frequency of transactions, and put those all into a melting pot, and you've got to try and balance up, okay, well, am I trading or am I not? And there's a lot of case law out there in relation to stocks and shares where individuals were spending a lot of time on crypto, or not crypto, on their stocks and shares rather, and did have experience and were found to be effectively acting professionally and trading. On the other side of it, there were quite a lot of people who still had quite a lot of frequency in terms of what they were doing each year, in terms of the number of stocks and shares. We're talking probably 200-300, and that probably, again, we've got to compare like with like. This is apples and pears, isn't it? You wouldn't expect somebody to be doing thousands of trades with stocks and shares ordinarily, but it's not unusual with crypto. So putting that sort of case law in place and overlaying it into the crypto arena, I think it's reasonable to say that if somebody is making a lot of trades but isn't necessarily spending a lot of time doing it, and there isn't a lot of money at stake, and I think a key factor is, are you doing this in a way that is professional and can be seen as a business and maybe managing money on behalf of other people? Those are sort of factors that can really tip it into that trading arena. If you are buying and selling for yourself and it's with your own funds, then I still think HMRC's view is likely to be that it's capital gains tax rather than income tax. And that may be motivated by the fact they don't want people to have the losses. Because there are probably going to be a lot of people out there who are doing lots of frequent trades, but actually aren't making themselves. I can include myself in that number. And HMRC aren't particularly inclined to let people have income tax losses, because those are like the most favourable losses you can get, really, because you can set them off against all sorts of other income and gains potentially as well. So that's where we stand. And I think it's important that if somebody is doing a lot of trades, that they figure out what their status is, and they probably need to get proper advice on that rather than trying to figure it out for themselves. It's unlikely HMRC are going to give you a view on it. You can potentially write to them and ask them to give you a view. I'd expect them probably to come down on a similar stance. They don't tend to like to get off the fence on that sort of thing, and it's a question of fact.
Yeah. They're like the HMRC, aren't they? They'll tell you, go and read these clauses and you interpret.
Yeah.
They will never tell you what their view is.
Because it is a question of fact.
I guess they don't want to be wrong.
They will answer legal questions. So if there's a deficiency in the law, then it's something like you could interpret it one way or another. Then they can give you a view on that. If it's a question of, well, the law's there and you've just got to interpret it, well, that's up to you. HMRC aren't there to determine every single person's situation, and that's where an advisor comes in, and they can help you navigate whether actually you're on one side of the line or another. But it's important because the difference in tax rates, and this is going sort of round back to the circle of what's the difference between capital gains tax and income tax. 20% headline rate for capital gains tax, but you've got this 12,300 allowance. income tax,
Mm-hmm.
it's how all your other income's taxed. So 20% if you're a basic rate
Yeah.
taxpayer, 40% if you're higher rate, could be as high as 45% if you've got income over 150 grand.
And at which point you're going to start losing your
Yeah,
personal allowance as
exactly.
well.
So it can
So
become really
you start to
expensive.
really start
Yeah.
taking a hit. Yeah. So when does income tax become a problem for people in the crypto space? You just mentioned there that predominantly most people will be capital
hmm
gains tax will be the main thing they'll pay. But when does income tax come into the question? Because there are a lot of instances where
Yep.
airdrops, for example, that may mean that you're going to get income tax if you're being remunerated in crypto in some way, shape, or form. That falls into income tax. Can you
Yep.
just elaborate on
Yep.
that for us,
And
please?
again, maybe trying to compare it a little bit to traditional stocks and shares. Like if you had stocks and shares and you paid a dividend, that's income tax. Yeah, you're receiving an income from that investment. Likewise, if I've got money in a bank account, I receive interest on it. I'm getting income on my underlying capital. That's the for many people will be the trigger point for what generates an income tax liability on their crypto. You've got the underlying asset. Are you receiving something on top of that for free, effectively? And often, the key one is staking. So if you're staking, you're getting coins in return, paid at a certain point. That's going to be subject to income tax. If you're doing something which is generating coins like mining, then that could be that's effectively a trade and seen as a trade and subject to income tax. I think most people are au fait with that, and that's probably a smaller proportion of people who are involved in mining. But there are projects out there which allow you to generate a return in that way. I'm involved in one which is Helium. So you can get into the mining space quite easily and start receiving coins which are subject to income tax and just sat in a wallet. So those are the obvious ones. Airdrops are a little bit more complicated because HMRC's view on this is that they can be tax-free in certain circumstances. So if you've done nothing really in return for receiving that, then that is basically free, and then it shouldn't be subject to income tax. But in other situations, if you have had to do something for it, then that can be. So it's again a case-by-case basis. You've got to look at the airdrop each time. And that's when you particularly if you're using stuff like some of the tax accounting software that's available online, airdrops often is where there's a bit of a gap and they're not quite certain how it should be treated or shouldn't be treated, and you might need to look at that individually. The other areas I'm getting more inquiries about are things like DeFi, and there's been a lot of stuff around DAO projects at the minute with huge interest returns put out there. So there was one called Wonderland, which was doing quite a lot of doing the rounds on social media recently, where you're getting 80,000, 90,000% APY and stuff like that. And I think that would be subject to income tax. But it's quite that for me is the stuff that keeps me up at night, thinking, well, that sounds amazing, but what happens if I've triggered a massive income tax liability here because I've been paid in these coins, and then actually it's just subject to a rug pull, and the whole thing is just fallen away? And
Actually, can you please talk about that? Actually, because rug pulls have been a common occurrence in the crypto space. I mean, certainly through 2021 for sure. There have been so many of them. What happens if you've got yourself into something like that, where there has been a gain on paper, but there's a
yeah,
rug pull? Does HMRC just think, oh, poor you, rug pull, don't worry about it? Or are you still liable, regardless of there being a rug pull or not?
yeah. I mean, it's a tricky one, isn't it? And I think if you've generated that income tax liability, you've still got it to pay. And it's the same risk you take with any of the investments that you might make. So if you're staking in a similar way, and we've got a huge crash, then your coins could be worthless, but you've still triggered the income tax.
You've
Yeah,
still
yeah,
generated that
because
income,
you
yeah.
basically you've been paid in a coin, and it's taxable at the value at the time that you received it. So if it's and this is something which keeps some of my clients up at night. So let's say I'm staking something. It might be an altcoin or something like that, where there's more risk and volatility of the drop. So I might be paid, quite a high amount in terms of staking return for it. but I run the risk of that if that falls off a cliff for some reason, not even if it's a rug pull, even if there's just a market collapses on that coin, I've triggered an income tax liability on a coin at a certain point in time, at a certain value, and then I need to make sure that I've got some money set aside, probably in a stable coin or just into fiat, that I can settle that potential tax liability in due course, because it will become due. And that's when you're talking big numbers, it keeps people up at night. That for me is one of the biggest risks with this. So you could be doing lots of great activity in the crypto space. You're doing nodes or NFTs and things like that, and that is treated as an income source because it's more of a trading income. It's not just an appreciation in value of the coins that you're holding in your wallet. You're actually getting a return of a different kind on it. That's broadly, as I said, apart from airdrops, what's generating this income tax liability. And it is at the point in time. So you've got to manage that risk of, I could be getting a 40, 45%, even 60%. You were talking about losing the personal allowance there. There's like a hidden 60% tax band that you're aware of, I'm sure. That, if I don't have something set aside as I'm going along, almost from this return, I'm just reinvesting and reinvesting, I could get into some really, really sticky trouble in the future when I actually come to need to pay my liability. So the issue with rug pulls is exactly that point, is that you can get some really attractive rates, getting you into the project, but you've got to bear in mind what the wider implications of getting into that project are and what the real risk is to you, depending on where you're sat in the world. If I'm getting paid 90,000 in a coin that was worth that a decent amount at that point in time, and then a month later it's worthless, well, I've got a shed load of worthless coins, but I can't set that off against the income tax liability. There may be arguments to try and argue, particularly if it's in a corporate, that this is something that you can set one off against the other. But for me, one of the biggest issues is that on one hand, I've got an income tax liability, and if I'm then paid in coins. So simple example. I've minted some NFTs, sorry, and I've been paid for that in ether. Yeah. So let's say that, and then if that then falls off a cliff, or maybe Solana, for example, maybe because there have been examples of that falling away. If that then falls away, well, I've triggered my income tax liability at the point that I've minted the NFT and sold them, but then I've been paid in a coin which has then dropped in value. And I can't set the loss off against my income tax liability, because that's, I've just got a coin there. That's not part of my trade. That's not an NFT asset. It's not my stock, if you like. That's just for the payment I've been received. I've been paid in kind, effectively. HMRC don't see it as currency. So it's another asset, but it's dropped in value and it's a capital loss. So I've got a capital loss on one hand, income tax liability on the other, and I can't set one off against each other. So it leaves you, that's for me is the biggest risk area at the minute with these sort of DeFi projects, or anything that sounds too good to be true. Well, there may be a nastier sting in the tail for them.
It's interesting you talk about NFTs, because NFTs are all the rage at the moment. I mean, some of the predicted returns out there are just absolutely insane. And I'm just like, because I started looking at them over the Christmas and New Year's period, because someone asked me about, NFTs, and I bought some NFTs in November, and kind of looking at some of the projects that are out there right now, like some of the projected returns that they're talking about are absolutely huge. And I started following a ton of people on Twitter. And there is this one guy who's been in the space for quite some time. And he posted a tweet about a guy who had been in the NFT community for 2 years. He's rocked up to events. He got to be in part of the community. He did a rug pull after 2 years. And he was saying, you don't know the real intentions of people coming into the space, and it erodes the trust in the space and some of the projects. But it's like, if you've minted something that he was part of in any way, shape, or form, or even just the coin that you were invested in, and a rug pull happens, it's a real tricky place to be. And I think this this comes back to something that I always talk about all the time, and this is something that I hope listeners will acknowledge, is that it is so important not just to go into crypto assets, NFTs, or DeFi projects or coins because of the
Oh,
hype
totally.
attached to it.
Yeah, I mean, it's not tax, is it? Yeah, but the tax is an important factor in it. But you just look at the number of coins that have been listed on just look at coin market cap over the last 3-4 months. Yeah, October time is about 12,000. It's what, 16,000 today, and it seems to be going up about $1,000 a month in terms of extra new coins. And you look into those coins, if you spend boring enough to have a look at them all, they all seem to be trying to jump on. A lot of them seem like scams, and it's a lot like the Squid Game scam. Honeypot contracts where you can put your money in, but you can't get them out, and it is just rug pulls. And this again comes back to that regulation piece, doesn't it? I mean, there is nothing really for people to fall back on if they've been conned. There's some fairly high profile situations where exchanges have been hacked and they've been able to get some of those funds back or convince the hacker to refund. But in a lot of for the average layman, then they're not going to be able to afford, or it's not going to make financial sense to try and track down the person that's to do that and try and find some sort of class lawsuit against them. It's so
Yeah,
anonymous, and I think that it's a fantastic space, but it has obviously opened up the eyes to people to rug pull for scammers, and there's an easy way to lose money as well as make money.
absolutely. So you've mentioned quite a few complications there and nuances that I think are very, very important for people to be aware of. And hopefully, if you're listening to this and you have been in this crypto space, that maybe just highlighted a few things that you didn't think about before. But in your opinion, Chris, what should investors in crypto be doing right now with regard to their tax position? What would be your advice, your view on a few things that they
Mm-hmm.
should
I
be doing
think
right now?
to some extent it's the boring stuff. It's get your admin affairs in order. Try and collect information as you go. To some extent, treat it like a small business. So if you were running your own business, you were sole trader, you wouldn't just do your accounts at the end of a year and present. Well, maybe you would, but hopefully you would present them to your accountant with a box of receipts. You want to do it on an ongoing basis. You want to know whether you're making a profit or not. And other parts to this as well that people just don't think about. Like if you've got a lot of your wealth tied up in crypto, particularly if you've got a family, then what are you doing to protect that? A lot of people are worried about, hot wallets versus cold wallets and keeping things off exchanges and stuff. But then has anybody actually got a will? Like what happens if you die? Has anyone got your passcode? All of that stuff. Like you've got to plan for the worst. So there's that part. Get your stuff in order. Make sure that you can report, you can justify everything if anybody comes knocking on the door in terms of tax inspectors. But equally, you've got a plan in place, almost like a business continuity plan for your investment portfolio. That, okay, well, if something happens to me, if I get hit by a bus, then my spouse, my partner, whoever it is able to pick up the pieces afterwards. You're not leaving with a massive mess. So that's one thing. I think the other thing is, I've touched upon it before. If you're doing something which is going to be a substantial sort of new activity, do your research, like you were talking about first. Is it the right project, obviously, but what are the tax implications of that going to be? Is it going to be income tax? Is it going to be capital gains tax? Get a feel for that in advance before doing it, rather than trying to unravel it after the fact, because that then informs that forward thinking piece that I was talking about before in terms of, should it be done personally? Should we be thinking about doing this within a corporate vehicle? Now, I don't think people should be jumping into setting up companies for doing cryptocurrency. The fact is, lacking regulation makes that difficult. Just opening a bank account for a company is a nightmare. So there are practical barriers in place, but I certainly am helping clients with making that transition, if you like. If they are doing this and want to do it professionally and they want to spend more of their time looking at this sort of space and generating an income, should it be in a company or should it be done as an individual? You've got limited protection in a company. That's one of the benefits of having a company. If everything went kaput, then it can go, and a company goes bankrupt, your personal assets could be protected. There's other wider consequences. You can be, disqualified as a director for not paying a tax liability, for example. So I'm not saying that you should go into this if you know that you're going to go bankrupt, but it offers you that layer of protection that you're not going to go personally bankrupt. It's not your whole life on the line here. And also there's wider financial advantages to it. If you were setting up a business and you didn't need that income, you didn't need to live off it, and you wanted to reinvest those profits, well, that's what corporate vehicles are for. It makes sense to reinvest it, because corporation tax at the moment is 19%. So that's a lower rate. It's obviously it is going up, but again, this is where you need advice, and it's got to be at a certain level. If you're just doing it in a small way, it's probably not worth it because of the complication. There isn't, you talk about legislation, there's hardly anything in terms of accountancy rules. The rules for companies in terms of tax law are even less clear than they are for individuals. So it's not something you should jump into immediately, but it's something definitely to think about. And the final thing, I think, is just get a grip of what your tax liability is going to be as soon as you can, either after a big transaction, so and you're keeping that aside in a stable coin or something that you feel like is protected. That you're going to be able to get those funds and settle the liability. Either do it after that transaction or reasonably soon after the end of a tax year. So your tax year runs to the 5th of April each year in the UK. So once you've done that, you've got a reasonable idea of, okay, well, this is what I'm going to have to pay in the January following, and so I can keep that aside. And you've got more comfort then that you can go spend, ultimately your profits if you do want to do that, or reinvest in something else, particularly if it's in a liquid asset like a property or something like that. So those are the key things that when I'm speaking to my clients about it, it's like, just understand the risks of everything ultimately that you're going into. Huge reward, but we know the risk of the volatility, but there's huge risk from a tax perspective you need to be wary of.
Yeah. There was something that I do want to touch on that you mentioned there. And I've certainly seen it from my time working in financial services and working around financial advisors and being a financial advisor. And that is the whole piece of having a will. Because even just on the stock side of things, like a partner dies, it has to go to the wife and the family, but actually account details, all that kind of stuff. If you've got Bitcoin, crypto in a cold warrant or USB or something like that, because obviously the memorable words, if you've not documented all of that stuff, how are you going to get your partner to get access to that as a resource? It's really, really important to think about. And we've not even talked about things like, the inheritance tax issues with those kind of things as well. And regardless of whether you move abroad or not, a domicile comes into it where HMRC can still have a say on your worldwide assets. And that becomes a real big issue. And I guess a lot of people have some very, very nasty surprises at some point when they realize, well, hang on a second, you're still domiciled. So it doesn't really matter whether you've moved elsewhere or not. HMRC still want their 40% in that of that asset because of the domicile status and stuff. And I think more than anything else, it is about seeking professional advice. And I know that do you find that people become reluctant to seek help from people like yourselves who are professionals in the space? Or do you find that people are kind of a bit more open because they realize they don't really understand the intricacies and nuances of
I think
things?
it's a mixed bag. You get a lot of people come to me, and it's quite strange because obviously like cryptocurrency is volatile, and you've got to be a risk taker to go into it to some extent. But it is that, so 6th of April is often a busy time for me because they're like, tax year's done and I need to do my tax return. Can I pay HMRC now? It's like, I want to be ultra cautious on the HMRC side of things and keep their noses clean. Others, I think, I still think there are large swathes of people who think that this is just too difficult to get their head around and are sticking their head in the sand. It's less so because I think the emergence of some of the tax software platforms out there have helped for people to calculate their taxes, and there's free tax calculators out there as well, I think open source ones. So that at least gives people a steer as to whether they're over that 12,300 limit in terms of capital gains. If they're thinking, right, I'm just doing this in a relatively small way and I've not made a huge amount of profits, then can I get comfortable that I don't have a liability to declare? I think more people are looking at that and I'm getting a lot of inquiries from people doing stuff which is the more professional type stuff, and they are very keen to make sure that they're doing things in the right way. and they want to do this as a business. And that's that I think is something that we'll see more and more of this coming year. The space is still gathering a lot of momentum. We've had a lot of challenges last year that came through, and a lot of blips during the summer and so on, and late spring. But it hasn't dampened the enthusiasm, as far as I can see, in terms of the people who are passionate about this, and it doesn't feel like it's going away with all the institutional investment that's going into it. People, HMRC are getting their act together. I think investors are getting their acts together as well, and hopefully, that all in due course is probably going to be a good thing. Because going right full circle to the beginning of what we were talking about in terms of what allowances and so on, how's the government treating this, and this should we be looking at crypto assets in the same way as other more traditional financial investments? Well, the more that people are looking at their affairs in a more professional way and getting their affairs in order, I think the legislation and government treasury will take that into account and think, well, actually, this is a space that we need to get behind rather than attack.
Absolutely. So in finishing this off, I want to kind of just ask you so that people are kind of clear, because I get different people who listen to the podcast and different people who listen to the YouTube channel. I have a lot of business owners and private individuals who have businesses, so on and so forth. As I say this, I'm thinking of 3 or 4 people that I've had conversations with last year that would be perfect for you, where they own businesses and they actually have a lot of money invested in Bitcoin specifically. And I think one of them had a lot of money in Ethereum as well. So what kind of client profile do you typically work with, just so that people know who are listening?
Yeah. So look, there is no hard and fast rule of the type of client I work with. I think it's more around the complexity around the affairs and whether I can add value. We're a large accountancy firm. We're not going to be offering the same level of service as somebody you might get down on a high street firm. If you want expertise in terms of this space, and also the comfort that actually you've got a larger firm with strength and depth to be able to look after your affairs, and that makes sense. Vast majority of my clients who are involved in the crypto space probably are into sort of 6 figures at least, and then it's because there is a cost involved to, particularly if you're looking at setting up companies and so on. It's not prohibitive, but it's something that you need to bear in mind if you want it done properly. If you want to set up a sort of a blockchain or crypto related business, unfortunately, all the uncertainty means that to some extent we've got to look at some of this stuff from scratch and try and figure out what we think the interpretation is. And you need people with experience to be able to do that. So it does come with a cost and a fee associated. But I wouldn't say there is a hard and fast rule. I mean, I've got some very wealthy clients at one end of the spectrum. I've got some fairly modest ones. I mean, my client base ranges from 14-year-olds through to 100-year-olds, and anything and everyone in between. That's one of the benefits of what I do, is I can work with such a huge variety of different people. But and it really is like, if I can add value, then I won't take people on if I don't think that I'm the right person for it. I will point them in the right direction of somebody who can help if it isn't me. So it's less about size of wealth or anything like that particularly. It's more about what are you getting involved with, and actually, can I help? Am I the right person to be helping with you, or actually should it be somebody else?
Excellent. And how can people get hold of you if they want to reach out and ask questions and try and see if you can add value?
So easiest way is probably just Googling me, and you can find me fairly easy that way. So Chris Etherington, if you type in RSM as well, then it should be hopefully the first result. You can just click on there. My profile's on our website, and there's a contact me button on there. LinkedIn, always happy to link in with people. So if you want to send me a request on there as well, that's absolutely fine. And I try to get back. Obviously, LinkedIn is a little bit, whenever you're dealing with social media, you get a lot of messages that aren't necessarily relevant to you. So it's apologize in advance if I don't contact you back immediately, because it's often a large stream of people. Alternatively, by email or phone. So my email address is chris.etherington@rsmuk.com. So feel free to get in touch that way.
Excellent. I will leave all of those in the show notes and on the YouTube description part. So if you are watching this on YouTube, you can literally just go into the description and go and check those out. I know you've been doing a lot of stuff last year around lots of kind of like newspaper articles. You've been like kind of like the go-to person really for a lot of the national press. Have you got much lined up for 2022?
It's something I've had an email this morning asking for some stories, so it's something I'm quite interested in doing all of that, and I do quite a lot of in the PR space and trying to highlight tales of the unexpected, if you like, from a tax perspective, try to make it interesting for people. And I think the key with crypto is that there's always, because it's so fast moving, there's always a story and an angle, really. So that for me is I like reading about it, I like writing about it. So there are definitely some articles in the pipeline. So you're not getting away from me, I'm afraid. The spamming on PR continues.
Good. Just as a note for anyone listening and watching, Chris and I have discussed you coming on doing a live Q&A on the channel. So if you do have questions after this, if you're listening on the podcast, probably the best thing to do would be to message me on Instagram, send me a direct message there. If you're watching on YouTube, put your questions in the comment section and we get Chris onto a Q&A, then we can actually just go through those questions and hopefully provide a little bit of interaction and stuff like that on a live setting as well. But mate, I really do appreciate you for spending the time with me this morning to have this conversation. I know it's going to be very, very helpful and very, very useful to a lot of people, because this has been like a topic that my background is investing. And I don't typically like talking about something that isn't really my area of expertise, but I've had so many questions, so I do a little bit of research. I've made a couple videos, and when I got introduced to you, I was like, okay, this is the person to really kind of help elaborate on this a little bit more with confidence, because sometimes I research and I'm like, that doesn't sound right, but everything is saying that it's right, and you say it and you're like, you need to check with an accountant. So it's really been really, really good to have you on. I appreciate it.
Thanks for having me.